right, good afternoon. It's great to be back here in Vancouver, one of the most beautiful cities here in North America. It's been a couple of years since I was at this conference. 2 years ago, I was speaking about the pending historic breakout in the precious metals sector. And we've had a historic breakout in the gold price. Unfortunately, the gold silver stocks have not participated yet. So this year, what I'm going to be focusing more on is the gold and silver stocks, which are setting up for a potentially very nice move higher. But to start off, I wanted to kind of look at the main drivers of what's happening to the gold and silver, mostly the gold price. We talked about this a couple of years ago, but I think it's important to really look at the landscape, which is changing very quickly on the geopolitical front, the monetary front, and so on. So the gold price has hit a record high, or the dollar has hit a record low versus the gold price recently. Despite a very strong dollar, there is all sorts of different power shifts taking place geopolitically and so on. And we have another big shift about to take place tomorrow with the change of administration in the United States. So it's going to be very interesting now how things progress. A lot of things may start happening a lot more quickly than they have been in the last years. But to step back and see how this all started recently, we need to go back to about 2020 when the COVID situation hit and the response by global central banks and governments, which was this monetary and what Jay Powell called the bazooka he unleashed on the markets. So central banks unleashed a huge amount of expansion of credit, monetization of debt. They just started to pump the system with so much money that it was able to fix the pullback in the economy and the markets and so on. But that doesn't come without consequence. So one of the views to look at this is to look at how the broad monetary stock, and this is in the U.S. chart, the M2, has been growing ever since 2020. There was a huge jump up in the monetary stock. And so many dollars have been flowing around. But it's just not the dollars, euros, yen, all sorts of currencies in all different nations. There is just an explosion of liquidity in the system. And what's also interesting, and this is a chart I've been looking at for over 20, 25 years when I've been presenting at this conference, is the velocity of this money or currency. It's actually not money. The dollar is not money. It's a currency. And this currency has been starting to move at a faster rate. So as the amount of money being put into the system, pumping into the system has been taking place, we've actually seen a reversal in the velocity. And this is just causing inflation to not come back. And it's come back from some very high levels recently, but we've seen that it's not really coming back to the targeted rate of 2, 3, whatever percent that the governments want to see that at, or the central banks. So this is a big problem. You cannot just get rid of all the issues out there. And one of the primary reasons what's feeding this inflation is the governments are out of control with their spending. We are running massive deficits, and on top of that, we already have massive amount of debt out there. So even with the talk of Trump saying, oh, we're going to cut all this spending and so on, but at the same time he's talking about other spending, I'm not really so sure that these deficits are going to go away. They may be reduced to some level, but they're not going to be reduced enough to fix the issues at hand. If they were to stop spending so much money, there's going to be a dear price to pay in the economy because so much of the economy is supported by this fake printing and the government overspending in the system. What does it look like on a bigger scale? Well, the debt to GDP ratios have exploded in the United States. We're over 100% of debt to GDP. The deficits and debt continue to rise, and the projections only get worse and worse and worse. Over the coming 20, 30 years, you're looking at the U.S. projected to have a debt to GDP ratio over 200%. That is Japan level. That's Greek level. We're in unprecedented territory, and this is unsustainable. And it's starting to get to the point where people in the bond markets are saying, okay, this is a big risk. This is something that needs to be compensated for. So we've seen a huge shift, a reversal in trends. Bonds have been in a long-term bull market. The rates have been steadily falling from the 1980s until the last few years, and now we're seeing a reversal. And that's a combination of inflation being embedded in the system and the investors are saying, well, we need compensation for the risks of potential more monetization of debt, more inflation in the future, more risks of default. So this is a big problem, because we've been going through a historic credit bubble for decades and decades and decades. We have been living off borrowed time. We have issued so much debt, especially in the United States, because the U.S. is the empire. We're able to export our debt, and the rest of the world continues to consume it. But there are big shifts taking place, and with the rates starting to rise, there is a very good chance that we're going to see a credit crisis. Where it shows itself first, we'll see, but it goes from corporate level to sovereign level. And we're seeing how rates in the U.S. are not coming down, and they're not going to really come down to the levels we saw before. Not unless they address the big issues, which include the debt and deficits, and that's not looking very positive. Another big shift outside of all this money creation is a big geopolitical shift. 2022 was absolutely a big move in the acceleration of all the timelines that have been taking place. Things were moving one direction, and then the war in Ukraine hit. This proxy war is a lot more than just a proxy war. This is a global war that's being fought on many different fronts. And why is this the case? Well, in 2022, when this conflict started, this war started, this horrible war, it's an absolute disaster. It's not even covered in the media anymore. But I can tell you, living in Europe, in Central Europe, in Prague, you see the effects of the war all the time. It's a huge amount of immigration from Ukraine, a lot of financial support, and just you hear a lot more about the tragic loss of life. Hundreds of thousands of people are dying in this horrible, needless, senseless war. But the geopolitical implications are vast. Russia's $300 billion in reserves was frozen. They were kicked out of the dollar system, and the rest of the world said, "Oh boy, this is something else." But the dollar has been weaponized in this sense. So how do we protect ourselves? And naturally, the move has been to gold. So gold is playing its function again as it has in history. It is the neutral asset. It is a neutral currency, the neutral money. And it is the only way you can really protect yourself from the risks that are taking place with the dollar. So the BRICS they're attempting to compete with the US dollar system, but it's not so easy. It's not like they have a dollar to replace, another dollar, something that can place the imperial US dollar with. And that is really their biggest issue right now at hand. And you can see examples of this after 2022 with India and Russia. They were trading, India was buying tons of cheap oil from Russia. And next thing Russia has, in Moscow, they have accumulation of all these Indian rupees. So, there's too much, the imbalances of trade. And there's no way to really fix this except for finding a new way forward. And that's what BRICS is really trying to do. And I think it's quite obvious that gold is going to play a central theme in settling the imbalances of trade amongst the BRICS nations. So that's a central theme that is taking place. And you can see this process happening now with the accumulation of gold by not just the BRICS countries, it's globally. I mean, you see it in Europe, and with Poland, with Hungary, with the Czech Republic, a lot of emerging economies. But the BRICS nations are big drivers of the accumulation of gold. And that is a big influence on the gold price at the moment as well. Central bank buying here, I'll have another chart there which shows the accumulation amount. But Trump is taking power, and these geopolitical questions are getting even more heated because he's talking about imposing all sorts of tariffs and so on. So naturally, this continues to push more and more people and more central banks and others into gold. And we know how important gold is on the global scale and the global system. Even our former central bank chief, Alan Greenspan, was quite clear about gold's role in the monetary system, that it is the premier currency. It exceeds the US dollar influence and so on when things get difficult. And we're moving closer and closer to this system. So there's been a general de-dollarization happening for decades. But the problem is when you de-dollarize, when you want to get out of the dollars, where do you go to? Where do you run to? The Japanese yen? To the euro? I mean, your options are very limited. The euro's got all sorts of problems. There's political, all sorts of fracturing of political systems within Europe. You don't have a unified treasury. You don't have a unified bond market in Europe. So the euro is not a real big competition to the dollar. You have other currencies that are, you have the British pound kind of getting a little bit of support, it being some that's going to that. But, there's no real good alternative. So where do you run to when you get out of the dollar? And gold is really your only real good answer in this system right now. So central banks have been on a massive gold buying spree. We're looking at gold reserves by central banks approaching levels that we saw back in World War II. We've had 55-plus-year decade highs, 5-decade-year highs, and gold accumulation by central banks. Over 1,000 tons a year in accumulation, and again, it's not just one central bank. It's China, it's India, it's Turkey, it's Poland, it's the Czechs. It's emerging economies, and it's not stopping. It has really actually accelerated, and with all the geopolitical tensions taking place, it's really motivating central banks to continue on this course. So this will show you kind of how the shift has changed in the bottom of the gold market in around the year 2000. Central banks were dumping gold on a net basis onto the market. You had the European Central Bank Gold Accord, where the Europeans were, well, mostly the Western European banks, central banks and governments were dumping their gold on the market at a very low price. Gold has gone up tenfold since we saw the price bottom around $250 an ounce. And now things are changing, and we have a huge accumulation by central banks. And even though the amount of gold held by central banks is approaching World War II levels as a percentage of their reserves on their balance sheets, it's very, very small still compared to what it has been. So we have all sorts of uncertainties in the market. Geopolitically, we have a new regime taking tomorrow. We have Trump assuming power in the United States again. And we're hearing all sorts of threats. We're hearing, tariffs, not just on Canada, but, on BRICS nations and here and there. And, you really, you're not sure where this is all going to end up. And that's driving a lot of interest into the gold market right now to protect yourself from potential other tariffs. There's actually a scramble for gold taking place right now in London. You're seeing huge physical demand if all of a sudden Trump puts 20-25% tariffs on all incoming goods, well, all of a sudden gold and silver could get very expensive overnight for those trying to import gold into the United States. That creates another big problem situation for the big short positions, for those leveraged, and so on. So there's all sorts of chaos taking place right now on that end, and you're seeing the demand for gold just really a scramble for gold at the moment, which really gives a condition here for gold to take off to a next higher level, potentially to $3,000+ an ounce in the near term. But looking back at this evolution of the secular bull market and the gold, price from the low in 250 until recently, this $2,000 an ounce was a cap. And when gold hit its peak out in 2011, when the gold price was reaching $2,000 an ounce, that was kind of its ceiling. In the last years, gold's been trying to break through it. And then in the last year, we had the big breakout. The gold price made a very definitive break past this technical resistance, and it's being fed by very strong fundamentals. So this is not some fluke. It's a very real move, and it's not something that appears it's going to change overnight. In fact, it's accelerating, and the short term could actually see there's potential for this price to really accelerate and overshoot itself in the short term. But this is a multi-year bull market we're entering into in the gold price. We'll have to see how this all plays out, because you have a new U.S. Treasury Secretary who stated on November 4th that his largest position is gold. He says that the gold market is in a long-term trend, bull trend higher. And he talks about how gold will potentially be used in a new system. And he's talking about how we're going to need to renegotiate trade agreements. The Bretton Woods Accord is going to have to be updated. And there's all sorts of potentials how gold is going to come back into play. So despite all the rhetoric about Bitcoin reserves and all this crypto stuff, that's a distraction. Look what the key powers, the people in positions coming in, and what the world is doing, what's happening with the gold market, because gold is the resort, the last money and the premier currency, the last one that you can protect yourself with. And the U.S. is also able to use that as a tool in different ways. So, it has happened in the past. There might actually be a situation where they renegotiate the price of gold overnight, and all of a sudden, the U.S. has supposedly the largest stockpile of gold for any central bank, and it can be used as a way to inject new liquidity into the U.S. Treasury, because they're going to have to make some moves to deal with this absolutely unbalanced budget and these deficits and interest payments that are going through the roof. So it's a very interesting moment in time for the gold market. I know a lot of people get involved in the daily gold price action, and it can get quite volatile. So I like to always step back and look at the bigger picture. If looking at the 200-day moving average, you can really see how the gold price is moving into an upswing. This is great news for the gold miners, because their average realized price is really showing on their bottom lines now. They're cashing up, and the averages keep moving higher and higher and higher. Despite the gold price hitting a record high, the silver price has been lagging. So I think one of the biggest opportunities out there is silver and gold and silver stocks. They have been left behind, and the silver market is starting to get some interest now, but I think we're really going to see some dynamics come into play. And we'll talk more about silver tomorrow on the silver panels, but silver's entering into its 5th year of structural supply deficits. Western investors have been dumping silver for crypto coins and Bitcoin for the last years. That trend's starting to reverse, and the gold price has taken off. And in perspective to the gold price, silver price looks really cheap. You have a ratio here where you have almost 90 ounces of silver to 1 ounce of gold. So to me, buying silver here is like buying gold at half the price. It has an explosive setup here, and it does not take a lot for it to move, although it is a very volatile precious metal. Looking at the gold stocks, you would expect the gold stocks to be moving at multiples higher, at a higher rate than the gold prices right now, but that's not the case. The gold stocks are barely able to keep up with the move up in the gold price. And I think the biggest and maybe the most obvious explanation is that the Western investor is not really aware of what's happening in the precious metals market. They're focused on AI. They're focused, again, on crypto, on Bitcoin, on digital pyrite stuff, the replacement for gold. Well, that's a lot of, sounds fun, that's a great marketing, but it's become a casino out there. It's filled with risk. And gold and silver is the opposite of crypto. It's a store of safety. It is not a casino token, and we'll learn about this soon during the next market correction, because crypto and Bitcoin is all highly correlated to the speculators and the easy money out there that's taking place. So the gold and silver stocks have, the gold market, you see in China, in India, this huge amount of gold buying. And it's the younger generations that are buying the gold. In China, actually, it's the 25 to 35-year-olds that are the largest buyers of gold. And they say in the next few years, it's going to be 25 years old and under. Same thing goes in other countries. It's not, a boomer investment. The boomer investment right now is Bitcoin. It's all the people who are buying Bitcoin, their ETFs, retirement ETFs, thinking that they've missed this huge opportunity. No, the opportunity is here. This is where you have low risk and huge rewards. Gold and silver stocks are trading at absolutely discounted values. And you can see that through the ratio between gold stocks, which is, here's the HUI Gold Bugs Stock Index, and the gold price. We're at historic lows, and traditionally, the gold and silver stocks move at a lot faster rate than the gold price. So even if the gold price were to steady out here, and the price of production would not rise too aggressively, these gold miners are just cashing up. They're making so much money. These gold stocks are going to start getting noticed. You cannot look around at the markets where things are so overvalued, and this sector is starting to look cheaper and cheaper and cheaper by the day. So having been invested in the gold and silver stocks for over 30 years, this has to be one of the easiest opportunities out there, investing in the gold and silver stocks. Long-term, gold stocks aren't the best investments. They definitely, they can really get you in trouble. But I think there's some really good opportunities out there. I'm going to quickly go through 4 or 5 of these, and then I can talk after this. But Fortuna Mining, they're here at the show, booth number 509. They're just cashing up their balance sheet. Silvercorp Metals just had a pullback. They're producing 7-8 million ounces of silver equivalent. They're expanding in Ecuador. They are on sale right now. Abra Silver's growing their footprint in Argentina. Argentina's become an excellent situation. They keep finding more silver. Idaho Strategic, this one is a junior gold producer with rare critical metals. In Idaho, they have 13.3 million shares. They don't have to produce a lot of ounces and make a lot of per share profit. Kootenai Silver and Gold, that thing has so much leverage to the silver price and some gold. And then one that I met at this show a couple of years ago, I just started buying, is Western Exploration. They have a nice deposit in northern Nevada. They just hit 16 out of 16 holes there. That thing is looking very good. And then Aztec Minerals is another one. I highly recommend everyone to go around and meet with these companies. These companies, when it comes down to investing in them, it comes down to the management, and it's very important to meet with them. There's so many opportunities out there. It's hard to pick which ones, but these are some of my favorite ones, and I'd be happy to talk with you more after this because my time is up. So thank you.